Welcome in Paul Mueller. He's a senior research fellow for the American Institute for Economic Research. Paul, welcome back to the show. It's always great to have you. So also today, the president meeting with top CEOs at a business roundtable here in the U.S. But, you know, something that we keep hearing from the president is that this is just a transition period and that Americans need to be patient for, you know, short-term pain for long-term gain. Here was him speaking about that earlier in the week. Listen.
All I know is this: we're going to take in hundreds of billions of dollars in tariffs, and we're going to become so rich, you're not going to know where to spend all that money. I'm telling you, you just watch. We're going to have jobs. We're going to have open factories. It's going to be great.
Okay, so Paul, how common is it to have this type of transition period? Also, you have Scott Bessent saying this is a type of detox, so we just have to wait for the pain. How common is this in the economy?
Well, the kinds of tariffs that President Trump is talking about and implementing, we haven't seen these for a long time. So really since the fall of the Soviet Union, the 80s into the 90s, when you have NAFTA originally negotiated and you have the World Trade Organization lowering tariff rates around the world, we've lived in an era of relatively free trade for the past 30 years. And I think part of why markets are reacting poorly, I think, one, they don't understand exactly what Trump's strategy is, what the long-term plan is here. And two, he seems to be wanting to change the game. And he's very optimistic, obviously, about these changes being for the better. But I think a lot of market participants are not so sure.
Yeah, and we know the president, when he was asked about a recession earlier this week, he didn't completely say it was impossible. Howard Lutnick, Treasury Secretary, said it wasn't possible. But they're saying it's not at our doorstep. There's not a recession at our doorstep. But from your perspective, what would be a red flag or something that the administration should say? We see the writing on the wall. We need to change course. What is that flag that you would see and say they're just not paying attention?
Well, I think, you know, the biggest thing to look at is the jobs report. So the jobs report for February came out just a few days ago, and that was was relatively positive. It was a solid report. It wasn't amazing, but it wasn't terrible either. That's what you need to kind of keep an eye on, because that's where, you know, it affects Americans. How many of them are working, what kind of job opportunities they have, and the jobs report and job growth is also closely tied to wage growth, which obviously matters for kitchen table issues in terms of buying groceries or paying for electricity or rent. So I think that the red flag will be if we see a significant uptick in unemployment and a downturn in terms of job creation. That's what I would look for. We won't see this month's numbers until next month, but I would be focused on that much more than the day-to-day stock market movement.
Yeah, and of course there is concerns we're going to talk about later in the show, these mass federal layoffs. Obviously the administration saying we don't want to grow federal jobs, we want to grow non-federal jobs. That is our goal here. But let me talk to you about this, because obviously, as you know, and anybody who knows anything about the economy knows, it doesn't like uncertainty. It likes certain things. We do know for certain that President Trump says he is putting these reciprocal tariffs across the board on April 2nd. Is that helpful for the market to know that there's this marker in a few weeks where reciprocal tariffs will go into place? Or because we've seen Trump kind of waffle back and forth on tariff negotiations, that it may not also be so certain?
Yeah, I'm afraid at this point, you know, President Trump, especially when it comes to tariffs, has a bit of a credibility problem. That is to say, we know that he wants to have tariffs, that he's moving forward with it, but walking back things so quickly and last minute, it's very hard to know whether he's going to do the same thing on those reciprocal tariffs. And, you know, he's even signaled this in terms of tariffs being a negotiating tool. If they're a negotiating tool, then it kind of means they're on the table and nothing is really certain, even if you have dates that are set. And so I think that uncertainty when it comes to tariffs is going to stay with us, and markets are not going to like it. Hopefully, if he is using it as a negotiating tactic, he can kind of wrap up whatever he's negotiating and give us some certainty. But I think he needs to rebuild some credibility on the tariff front in terms of where he wants to go, what it's going to be, why, and how long he's going to stick at it for.
All right. Paul, always appreciate your insight as we watch these markets. And I know many people are eager for some stability here. So thank you for your time.